Good afternoon, everybody from here, from South Kensington, for this first virtual meetup for executives of Austrian subsidiaries. We are so far still an almost elite group. A few seconds ago, we reached the equilibrium between panelists and attendees, but that shall not deter us from go right into this meeting. I'm glad that you all found our virtual door. I would have preferred to meet you under different circumstances, as you might all believe. I'm not sure if Ambassador Zimmermann and Deputy Chief of Mission Katharina Kastner have tuned in. They have promised that they will, stop by at least, for a virtual greeting and drink. Here again is what we want to do over the next couple of maybe 30 minutes, 40, 35 minutes. I'm going to share some aggregate analysis on the economic situation in Great Britain. I would like to comment a little bit on the rather static state of play of the Brexit negotiations, and then maybe we'll talk a little bit about the way the virus may shape the years to come, the future that we will merge into, which is going to be an interesting perspective because we need to plan for something. After my part is over, I will hand over to my deputy Vera Meyer. Before that, to our head of tax and legal, Michael Gray, who is going to brief you on government support schemes, the best of government support schemes. Vera will talk a little bit about the latest news from the travel, exit, and entry front. Then Peter Pesel, my head of technology, will take us on a little journey on the changed technology landscape. And after that, we will open the floor to our legal and tax experts, our lawyer and tax advisor of trust, Alex Kaufmann of Flatgate and Alex Altmann of Blick-Rotenberg, and ask them to kind of share with us frequently asked questions of the last couple of months, probably the same frequently asked questions that you have asked yourself. After that, I hope you will still all be around, and we can go into a conversation and a dialogue. There's a few housekeeping remarks that I would like to share with you, not as many as if we would be all in the same room. We will record the presentations and stop recording the moment anyone from the audience will come on. From then onwards, we will have Chatham House rules. If you want to be heard, and every voice matters, there on your control panel you find a button to raise your hand. You will be recognized and unmuted. Unmute is the new reply all button. You will be unmuted, and or you can ask questions in the chat function, and Vera will kind of collect them and throw them into the ring. That's pretty much everything. You can smoke as much as you want. The toilets are where you last saw them. If there is a fire drill, it's not ours. But most importantly, what you can see everybody else who is participating, hopefully in your control panel on the right-hand side. So questions, remarks, ideas do not necessarily have to be directed to one of the speakers, but can be directed to anybody else in this virtual banquet hall. Let's go into the middle of it. The United Kingdom probably has been hit more severely by the pandemic than any other European country, with an excess mortality of beyond 60,000. It has won the not so desirable title of Corona European Champion. And I don't know if I do live a little bit in between the worlds. I've watched Austrian television, so where you think that the pandemic is kind of retreating there into the background, here it seems to be the big reality. The lockdown is being eased, but the mood is one of uncertainty. I think it is safe to say that the last couple of months there might be some of you who won't agree, but it wasn't the finest hour of the British government. Boris Johnson had not only personally a bad pandemic, he also had politically a bad pandemic. I think he was very much hoping to be for a long time the leader of Brexit Britain, and it took him 2 or 3 weeks to accept that he is now the leader of Corona Britain, something that he didn't want to be, and that probably were the 3 weeks that made things a little worse here. In all fairness, one has to say there's other reasons why, you know, the pandemic has dealt such a severe blow to the United Kingdom. It has to do a lot with population density. I don't know if you realize that England is 4.3 times as more populated than Austria. It has, of course, to do with the fact that, you know, the health system had been subject to austerity policies for almost a decade. And it has, of course, to do with the fact that London, a metropolitan of 9 million people, has 4 international airports that turn over 6 times as many passengers every day as Vienna, Schwechat, with about 1,000, as we now know, about 1,300 patient zeros that flew in mainly from Spain, Italy, but many other places. Let me go to my first slide where I thank you. We were practicing that, and you know, obviously I'm not smart enough to do it on my own. Andy Haldane, the very smart chief economist of the Bank of England, said a couple of days ago, it's going to be very ugly. And indeed, it is already very ugly, and it's going to get uglier, although there is a large degree of uncertainty on how ugly it's going to get. I mean, we know that the economy shrank by 2% in the first quarter. It shrank by 5% in March, by 20% in April. It's going to be between minus 15 and 20% for the first quarter, but we don't really know in which direction it is going from there. What I think we need to do, and we need to carefully observe, is the transmission channels that the virus delivers, through which the virus delivers its economic impact. And I have listed them for them because in order to plan, and in order to plan, we need to forecast, and we need to look at these transmission channels. What is going to happen with them? So transmission channel number 1 is the supply chain disruption. That's, you know, that's reduced demand and, you know, scaled back production because there are no raw materials or no semi-finished good. The reduction of labor supply, that's all the people that don't want to come back to work or cannot come back to work. Then, of course, most importantly, the impacts of uncertainty on consumption and investment, a significantly reduced level of confidence, both with businesses and with the consumers. Then, of course, the direct impact of partial or full sector lockdowns, and then, you know, policy reactions like, you know, grants, loans, furlough schemes, and guarantees. All these channels will be determined by the course of the disease. And when I selected "Don't make hope your prediction" as, you know, basically the title line of this slide, you know, I thought that this is the smartest advice that you can get, because sometimes you feel that people get the impression it's going to be over. It's going to be, you know, it's going to be a recession a little bit more severe than the one that was before, but there is a large probability that it will not, because, you know, if you look at, you know, this little, you know, gray thing. So we don't know if there's going to be a second peak. If you look at what happened yesterday in Texas, in North Carolina, and in Florida after easing of the lockdown measures, you get a better idea of what might happen somewhere else in the world. If you look at vaccines, you know, we might be looking at something that's more like a flu vaccine that doesn't cover 100%, but, you know, or offer 100% of security, but mainly only 50, 60, or 70. And if we talk about treatment, maybe it's good to think about treatments for a disease like AIDS that we can not heal, but, you know, we can now, you know, kind of control to a level where we can deal with it. So we might not be going back to, you know, just going through a deep, ugly recession, but maybe through something more. Let's look at it. You know, the forecasts for the British economy are anything between 8 and 15%, depending on how smooth or how bumpy the exit is, depending on how much peak vaccine treatment will influence these transmission channels. Of course, like always, it will all depend on the consumer. The consumer is the driving force behind a service-focused economy like the United Kingdom. And there are now 3 broad categories of consumers. It's the unemployed and the struggling. That's about 10% of the workforce. They are not going, you know, to contribute much to future growth. they need to be reskilled because their jobs also will not come back. Then there's the furloughed and uncertain. About right now, not 8.4, but as I read on a much better slide of Michael Gray, 8.9 million people, that's more than a quarter of our workforce. They probably will be inclined to defer expenditures to the mid-term, long-term future. And the actual really important group are the employed and stable. Probably all of you, me, 65, 70% of the people, they work from home, or they are essential workers, and they have much more money now than they had 3 months before, because they didn't buy any theater tickets, they didn't go to restaurants, they didn't go on vacation or anything. But the question, important question, will remain, and this is also has very much to do with this big spread between 8 and 14%. How will these people react? What will they do over the next couple of weeks, months, and years? Recovery, according to most observers, most analysts, is going to be at best lopsided V. So it's going to be steep down and then, up on a quite flat trajectory. The forecasts for next year are going to be for GDP in 2001 is going to be 1.5 to 7% below the level of 2019, and there is no guarantee that we will get to 2019 even in 2022. There are good news too. First of all, the governments all over Europe and also here in the UK have reacted swiftly, and there has been so far no permanent damage to the economy. But there's a couple of things that we need to consider in the future. Let's go to the next slide. Thank you, Vera. Let's look at the sector impact. Important for any business to see, what sectors. There's again three transmission channels. It's direct impacts from sector lockdowns and labor supply disruption. It's supply chain spend impact. That's the impact of the investment of other people on the people in this specific sector. And then there's the employee spend impact, which is basically consumer demand. So this is a little bit difficult to read, so I'm going to read it for you. Most impacted, that means minus 25% in sector GDP to least impacted. That actually means 2% plus in sector GDP. And that's going to be food service, hotels, transport, retail, leisure, construction, education, coming from the top to the bottom, manufacturing, the UK average by 9%, logistics, administration and support services, professional and technical services, real estate, finance, health, information and telecommunications, utilities, and the growth sector, of course, publicly financed infrastructure projects. So as a rule of thumb, you could say, if the people that I deal with, my customers, are in the upper half of the table, I am maybe looking into some difficulties. If they're in the lower half of the table, I might be luckier. Must not necessarily be. I was a keen observer of the last big recession in the United States, 2009, 2010, and Austrian niche players have historically been, fared quite well when it came to, consolidation, concentration of the business landscape. Because some of them or most of them have one or the other of the following characteristics. They're either family owned and have a long-term perspective, or they are quite well capitalized, or they are very dependable, or they are very, very specialized on their niche. So it's not always it's sometimes in situations like that where a lot of businesses will disappear, the weak will suffer, but the strong might prosper. Let's go to the white elephant in the room, Groundhog Day, Brexit facing the extreme. Shortly after Britain actually left the European Union on 31st of January, and before the negotiations for a trade agreement ever started, the issue was relegated to a side issue by the virus. In the meantime, we had 3 rounds of video conferencing that doesn't it's not very conducive for difficult negotiations where most of the important exchanges happen over the water cooler or the coffee machine. And there is no surprise that, and I was if you remember newspaper reports, harsh tone, mostly geared to domestic audiences. But right now, there is basically there's limited hope that it will get us or take us somewhere. Options as of June 2020. The extension is basically off the table. It's theoretically still possible, but practically probably not. A deal by October, or no deal and default of the trading regime to the WTO. The negotiations are at an impasse. The Prime Minister at the high-level consultations that they had yesterday with Mrs. van der Leyen, or was it the day before yesterday? The consultations didn't yield anything of substance, but they said we need more oomph. So I think, and what I and many other people think, they don't need more oomph. Somebody needs to drop some red lines, because right now, impasse, red lines, state aid, fisheries, competition, level playing field, Northern Ireland. If you boil it down to two words, it's sovereignty and integrity of the common market. Or even more pedestrian, we would like to have a deal with very few strings attached, and we would like to prevent the United Kingdom, a strong competitor at our doorstep, to gain any competitive advantage by undercutting our standards. So that's what the two parties want. It doesn't seem to be easily reconciled. And if you look at, for example, I don't know who of you noticed that the Brits have published a new tariff schedule about a week ago, and yes, it does already undercut the EU standard. So there's a certain indicator that maybe the European Union's position is not that wrong. I mean, a lot of people believe that it needs to be kind of softened a little bit as to the point where, yes, we want a level playing field, but we'll give you some say in where we set the level, but we'll see that. Lots of observers believe that there's very little incentive for compromise, specifically on the side of Great Britain. There is no more UK alignment with EU interests. The United Kingdom has no. Please go back to the other slide, Vera, once more. Thank you. There is no more UK alignment with EU interests, so there is no appetite for contributions into the EU budget. There is no appetite of the side of Great Britain to be part of a European rescue operation or something like that. They, of course, and have done for many years, believe that independent crisis management is more efficient. Important, there will be minimal economic difference between a skinny trade deal and the WTO regime. The difference would be political. It would be the foundation for collaboration in the future, for alignment in the future. But just for a large British manufacturer, the trade deal is not going to do much. Tariffs and quotas are overrated. There will be no tariffs barrier. There will be supply chain disruption. It's not worthwhile for Boris Johnson to look like a weakling. The trade accord with the US requires decisive break with European Union rules, and there's of course the most important argument: the economic fallout of no deal that was politically feared before will be absorbed by the COVID-19 recession and not be felt at all. There's still hope, of course. There's still all to play with some flexibility. There's the German presidency that might be able to broker a deal, but altogether there's a good chance that there's no deal Brexit will be no deal Brexit will compound the effects of the pandemic. A bad news insofar as imposing trade restriction in a time of recession is especially dangerous, because it deprives companies of competition, of partners, of clients, of customers in a time when it's going to be very, very difficult. When this process is compounded by something else, and it's going to be very, very difficult after that to get back to anywhere that that guarantees or supports survival. At the end, I would like to talk a little bit about COVID and the big unknown. The pandemic is a novel experience for all of us. The cause of and the response to it are completely unprecedented. And this is also why we have no idea where we are going. We have no idea what the world is going to look like that we will merge into in a year or two from now. And in order to get a better understanding of that, I think it's important that we keep our eye on what I would call the forces of change, the forces of transformation. And the first one, of course, is the transformation of the consumer landscape. Unemployment, loss of income, anxiety are gonna make people to reevaluate their priorities: family, health, community, the digital experience. The question is, will they consume less? Will they consume the same? Will they use different channels? Will they now focus on wellness and mindfulness and purpose? Or will everything go back to what it was before? Probably not. And if not, there's going to be significant effects on markets, and probably there will be more losers than there will be winners. The accelerated digital transformation and the deepening of the digital divide. Think of all the 1/4 of British children that didn't go to school for 3 months because they didn't have a tabloid, they didn't have a mobile, they didn't have a computer, and they didn't have a mother with a PhD or a father with a PhD who was able to decipher the signals from the schools. So the accelerated digital transformation, is going to stay with us. It's going to be a permanent shift for companies to use technologies to run corporations. 85% of corporations didn't know that you can do that. But if it stays with us, if teleworking stays with us, if we change the toolboxes of our management skills, lots of things will change. If manufacturing changes to virtual reality, artificial intelligence, and digitalization of the supply chains, our commuting patterns will change, real estate will change, cities will change. Third, the pandemic is a common experience, but it seems to divide us. There is a resurrection of nationalism and protectionism all over the world. There's a deterioration of international trade, of international relations, US, China, US, Europe within itself. There's geopolitical tensions wherever you look at. So the question is this the end of globalization? Is globalization that didn't work for lots of people for the last 10 years already, is that going to go into reverse? Is this the end of the international division of labor? Is this the beginning of onshoring? Is this the beginning of a regionalization of production? All kinds of these things will very much determine the course of our journey. And most importantly, it's going to be how the winners will deal with the losers. We know one thing for certain within all this uncertainty. For certain, we know that by the end of this year, there will be huge heaps of fiscal debt, private debt, corporate debt, and a shift to the gig economy that we haven't seen before. We will need to spend much more money on our health systems. We will need to spend much more money on strengthening our social safety nets, and our systems will be too fragile to employ any austerity policy. So there's not much to be done than to raise taxes, unless we convert short-term debt into long-term debt, which is just passing on the problem to another generation. Higher taxes for the well-off, higher taxes for corporations, higher taxes for entrepreneurs. There's many ways to do it. There's many ways to do it wrong, and there's many outcomes that you want to avoid, but they will be unavoidable altogether. And I can only hope that the journey that we are embarking on will, take us to a place that is worthwhile. That is worthwhile to be at or to arrive at. But look at us; these are the four channels of transmission in the long-term run. I'm done. I'm sorry it took me longer than I think it should have taken me. I got carried away, but I would like to now turn over to Michael Gray, the head of tax and legal, who is gonna not appear on the screen. We had some technical problems with his camera, but his voice will be heard, and he's going to brief us on the latest on business support schemes. Michael.
Good afternoon. Thank you, Christian. Yeah, what I thought I would try and do over the next couple of minutes is just very briefly give you an overview of where things are at the moment and where they might go. I'm going to ask Vera if she can just move my slide forward, because my camera technical difficulties have obviously also extended to my keyboard. I'm not going to go through these stats line by line. You can find them all on gov.uk and elsewhere. But these are the big measures that the government brought in when the crisis hit. I think what's interesting to say in general is that when the crisis first hit, there was a lot of questions coming up about the detail of these schemes. Inevitably, as they were introduced so quickly, we were getting a lot of inquiries in the office trying to clarify some of those things. And as time's gone on, that seems to me to have almost entirely settled down. Certainly with some of the changes that were brought in April, changes, the introduction of the coronavirus large business interruption loan scheme, which was is the loan scheme for businesses with turnovers above 45 million pounds. There were initially problems with the way the banks were demanding people, directors, put their houses up as their private houses up as security. That was stopped, and it's all really settled down. Where we're hearing that there is still some friction is in the relationships with the banks and in getting access to that money, particularly around this question of the EU state aid rules. There's a criteria that you mustn't be an undertaking in difficulty, and there's some debate about whether the UK interpretation of that has been a little bit too strict and is stopping people accessing finance that they might otherwise get to. What I think is interesting, particularly here, is if you look at the red figures in the 1, 2, 3 third column, showing you how what's the rate of approval for these loan applications, and you can see that you've got a very high rate for the bounce back loan schemes, which are the smaller loans for starting at £2,500, and then less as you go up the scale. And I think probably the reason for that is that the bounce back loan schemes, those loans are 100% guaranteed by the government, whereas the other two beneath it are 80%, and that's where we saw a lot of dissatisfaction with the way the schemes had been set up. The fact that you had to apply via the banks, meaning that they understandably wanted to go through all their checks and procedures before they lent any money, and that did seem to cause quite a lot of a bottleneck. But as you can see, that seems to have largely settled down. I suppose the flip side of that is that you can see that this is all leaving quite a lot of debt for businesses, and it's interesting that the banks seem to be keen to make sure that the message is understood that these are loans and that this money is going to have to be paid back at some point. Anecdotally, what we've been hearing is that for a lot of businesses, these schemes haven't in the end been something that they've wanted to use. There have been often other ways to access finance through other channels, be that from your parent company or out of your own reserves or whatever it is. So I'd be interested to hear your input on that. Moving on to the next slide. What we are now at the stage of is where these schemes are going to go next. As you are no doubt aware, the coronavirus job retention scheme is changing, and it's becoming a much less blunt instrument. Partial furlough is going to be possible, and we're seeing gradually the employer contribution being phased in. What's next? Well, what we're hearing about is possibly a move away from a one-size-fits-all approach. So far, especially the job retention scheme has been a very stubbornly sector agnostic. And the question is, when the job retention scheme goes, and there are still lots of businesses in certain sectors, not only hospitality but other creative industries as well, which won't be getting back on their feet, what's going to come in to support those industries, and will there have to be some kind of sector-specific measures? Some of the other measures we are wondering maybe that will be extended. That's certainly being talked about. The statutory sick pay for the coronavirus is currently only for smaller businesses. That could be extended. That would obviously be relevant as test and trace kicks in, and we start to see people being told that they have to self-isolate instead of going to work. The relief on business rates, which again is initially only for certain sectors, there's talk that that could be expanded to all businesses, which would obviously be a very easy way of providing some support simply by refraining from collecting that tax, and extending tax deferrals more generally, or applying it to other taxes. Not specifically financial support, but certainly a big part of the discussion that we're kind of listening in on between business and government are issues like regional variation, the fact that different rules apply in Wales and England. There was a great little anecdote I heard the other day about a road in, I think in Chester, where the road straddles the border between England and Wales, and it's the road where all the main car dealerships are. And the car dealerships in Wales are currently not allowed to open, but the ones in England have been open for a little while now. So there's mixed messaging going on there. And I think the frustration is perhaps not so much that the rules are different, but that the basis for making those, the decision process behind arriving at those different rules is different. So that's causing confusion. Quarantine, Vera is going to talk about that shortly, but of course, that's a big issue with companies who want to bring in their technicians. There's been pressure from industry bodies to have air corridors. Not too much sign of that yet, although there are some very specific exceptions. Schools, again, obviously very relevant for employers getting their staff back to work. We've seen some opening, but we don't really know when all the schools will be back yet. The continuing debate about making your premises COVID secure, exactly how big should that distance be? It's interesting to hear what a difference that reducing that social distance from 2 meters to 1 meter, what a massive difference that can have on capacity and the ease of running a factory, as I'm sure many of you will be aware. And as I hinted before, the test and trace system coming in, many businesses are still looking for more information about that. We know there's the basic rule about when somebody will have to self-isolate if they've been in touch with someone who has been traced, but it's not entirely clear yet how that plays in with the general health and safety regime. So will the tracers bear in mind the social distancing measures that may be enforced at a workplace, or will they rigidly enforce sort of a blanket rule? Looking further ahead, where's this all going? I think it's interesting here, the CBI wrote to the Prime Minister the other day, and they had really three prongs to where they say this recovery should go. The first one was skills, training, reskilling, upskilling. How are we going to make sure that people whose jobs are sadly no longer in existence able to go back into employment or to stay in employment? There's a suggestion that the apprenticeship levy might be made more flexible, so that some of the money that currently goes into that could be used to directly top up people's salary. Digital transformation, of course, as Christian's already hinted, we've seen a lot of that in the last few weeks. So there's a question of building the digital infrastructure and stimulating that through policy, and of course the idea of a green recovery. And again, in this not just in the CBI's campaign, they've been very specific about measures that could be taken to starting in social housing to make those buildings more environmentally friendly, and then expanding that to private households as well, and building up e-charging networks, the idea of a scrappage scheme for fossil fuel cars. And also we've seen, you may have seen a letter from 200 big businesses to the PM the other day, also demanding that the recovery should be a green one. So the point now, I think, is just it's interesting to see how these big trends that we talk about all the time are now beginning to trickle down into the actual debate about concrete policy and concrete tax reforms and the way the support measures could develop. I fear that I've already overstepped my time, even though I tried not to, so I'm going to stop there and hand back to Christian.
Thank you, Michael. If you have Michael, over the last couple of months, has been really trying hard to stay on top of a host of programs, rules, regulations, changes. I don't know how many times we have kind of changed the guidance, the paper that we, or the document, the downloads that we produced in order to kind of circulate this information amongst you. Please get back to him, by email, by telephone, if there's questions. We did work a lot on that, but if we really wanted to have a get rich fast scheme, we should have opened a consultancy for travel advice. That was where we getting in and getting out of pandemic UK was one of the major questions of concern. And this is my deputy Vera Meyer with the latest on entry and immigration. Vera.
Hi everyone, good afternoon also from my side. I will try to keep it short and concise, but as we've had a lot of questions over the past few weeks concerning business travel between Austria and the UK, we felt it would be a good idea to give you a short overview of the travel restrictions concerning these two countries. So let me just jump to the next slide. Most important question, actually, how to get from point A to point B. Usually it's easy, you hop on an airplane. At the moment, not so much. There has been a landing ban by the Austrian government for aircrafts originating from the UK in place since mid-March. It just has been prolonged until the end of this month. So at the moment, your best bet would be, if you want to fly, to go either via Frankfurt or Munich. Both offer a pretty good connection flight on to your final destination with very short stopovers. It is also possible again to go by car due to the latest easing and restrictions from Germany and France. If you are on business travel, you can go through them. You can transit again, but please make sure to have the necessary documentation in place if you choose to drive, as otherwise this might land you in a 14-day quarantine in France. Quarantine being the topic of the day, let's go and talk about the entry into the UK. All of you are aware that a 14-day mandatory quarantine has been instituted last week. So far, so good. There is no way to get out of the quarantine by testing, like having a negative COVID or PCR test. But there is light at the end of the tunnel. There is quite a wide range of exceptions for people coming into the UK. So if you are, for example, a specialist with technical skills for essential or emergency works or services, you are on a good track of not having to go into quarantine. This means for a large proportion of people traveling, like for commissioning, maintenance work, repair work, so safety checks, there is a way out of quarantine or to bypass quarantine. There's quite a few documents that you need to present on entry as proof. The respective border officials will be in charge of taking the decision if you can claim an exception to quarantine. But so far, we have not heard of anybody being turned away at the border who had to go into quarantine. This is usually a good sign, as problems usually end up on our desks. So far, so good. For how long this law will be in place? Well, your guess is as good as mine. We can't tell you. But as we've seen quite a lot of resistance forming, we could imagine that there might be a change in the medium term, especially when the holiday season and the travel season starts in earnest. So it's a distinct possibility that there will be changes. Moving on to Austria. Entry into Austria has changed, or the laws have changed as of today. Anybody traveling from the UK to Austria, irrespective of their nationality, is allowed to do so. You have to have either a negative SARS-CoV-2 or a PCR test that is no older than 4 days to enter, or you have to go into mandatory quarantine, also 14 days, which can be shortened, and this is the difference to the UK system. You can take the test either in the UK or in Austria, as long as you have a negative test. You can also shorten the quarantine. Tests can be taken directly at Vienna Airport, for example. Just make sure that you pre-book your slot for that. It takes about 4 to 5 hours turnaround time until you have your results. You're not allowed to leave until then, but afterwards you're free to go. Or if you already want to do it in the UK, it might be a bit tricky as you have to go private. The national health system still only allows testing for people who show COVID signs. So you would need to go to a private clinic or in either London, for example, or any other destination, but make sure that you get your results back in time to travel so that the test is not older than 4 days. Well, it sounds all pretty easy and pretty simple and straightforward. It is not, unfortunately, which our inbox can tell you quite a big story from. We get daily a lot of inquiries and we are very happy to help. Please let us know if you need to travel, if one of your employees need to travel, or if you need to bring colleagues over from Austria. We can help you in all directions. We also have compiled a Corona briefing on that. Unfortunately, only available in German, but your colleagues in Austria would most likely appreciate it. That's it for me. Thank you very much.
Thank you, Vera. As I mentioned before, there has been a permanent shift in technology running corporations, and probably, and this is basically the essence of many conversations that we had, and many articles that have been written on this, published on this topic. Survival in the mid and long term run will very much depend on how quickly we are able to kind of rethink our toolboxes and the application of technologies. Many of them have been, have always been around, have been brought to the surface by the pandemic. And Peter Pesel, the head of technology at the Trade Commission, is here now with a kind of, with an overview, with a little excursion into the new technology landscape. Peter.
Hello, thank you, Christian, and hello from my side as well. My name is Peter Pesel, and I'm responsible for all innovation and technology affairs here. And yes, as Christian mentioned just now, there have been some changes happening in the technology landscape in the last few months, especially at the beginning. And we have been looking collectively at those changes and how companies have been adopting and using those technologies and what we can expect in the near future, what I'm trying to summarize now in the next few minutes. At a very high level, you can summarize those technologies into two types. And first of all, we look at so-called SMAC technologies that you see on the very top of the table. These are not really new technologies. Here we're looking at cloud services, video conferencing, something that we are doing right now at this moment. And most likely, some of you have already been using this in the past, maybe not to that extent like right now, and maybe you have upgraded to a new software or switched provider for your conference calls, starting new tools for collaborative work. And yes, many companies, especially those operating in the digital space, have already been playing around and implementing those technologies. But as we heard before earlier as well, there are still many companies out there that have been behind the digital transformation and trying to catch up right now. And also why these so-called SMAC technologies are essential for maintaining at least some operational use, well, at least on the management side, to communicate with your employees. If you're a manufacturing company and these online tools alone may not help you if you have to shut down production lines because you could not meet social distance criteria for your employees and so on. But this is where a small technological shift started to happen. And this is where we are looking now at the so-called dark technologies, dark with a Q. I'm always impressed by the creativity of those coming up with these acronyms, by the way. And those include robotic automation, artificial intelligence, immersive technologies, blockchain, and so on, technologies you can hear in the media, which have been demonstrating through many use cases now in the last few weeks and months that they can provide additional value to the companies in various parts of the supply chain or the value chain of a company, from designing new products, automation in the manufacturing space, digitalization in the supply chain, remote maintenance, and so on. And I say a shift started because most of the time you cannot switch and implement those technologies from one day to the other, right? This is a process. And we just recently did a webinar on immersive technologies, combining augmented reality, virtual reality, and mixed forms of it. And we had an industry expert there, and he said, yes, companies started more and more exploring the use cases of immersive technology, using a tablet or a smartphone, and trying to use those technologies to help during the last couple of weeks to do remote maintenance and so on. But the consensus from the companies who have already been exploring these technologies wish they have been further ahead. So it's not just you start from one day to the other. And we expect more companies exploring and adopting these kinds of dark technologies, and we do expect that they're here to stay. And we as an office, we keep also looking at these trends, use cases, technologies, and try to communicate those through various webinars and digital events. And as mentioned before, we just recently did one on immersive technologies, and especially looked at use cases for manufacturing companies, but all kinds of companies. And you're invited to join, of course, those webinars in the future. One of our next topics, and you see that lower down in the table, is going to be cybersecurity. We also have seen an increase on cyber attacks because, of course, of the shift of employees from the company to the home office. So if you're interested in those topics or other technologies that you see on the list, please get in touch with us. I know this is a very, very quick overview of what's been happening, but I'm also aware of the time, and I want to hand back to Christian. If there are any questions, I'm going to be here afterwards. I'm very happy to answer them. But now back to Christian, who will lead us to the next point in our agenda.
Thank you, Peter. The amazing thing is whatever happens in your life, traffic accidents, divorce, childbirth, bankruptcy, everything has a tax angle, everything has a legal angle. And so we thought, it's a good idea to bring on our trusted experts, the people that we have been working with for, I don't know, many generations now. This is the second Mr. Kaufmann that, has been the lawyer of trust of the Austrian Trade Commission. He is a partner at Flatgate, and I asked him first, to kind of tell us about what his mind was on over the last couple of months. Alex.
Thanks very much, Christian. So I'm basically going to give a little kind of top of the pops of legal COVID, as it were. And I think in terms of describing the general trend is that there's been less transactional work and much more dispute work, both of a litigation and an advisory nature. That has increased hugely, and the factor that plays a role there is clients asking to be advised in relation to their ability to step away from contractual obligations or perhaps amending them. And the two topics there are COVID as force majeure and frustration of contract. In terms of COVID as force majeure under English law, one needs to understand it only really applies where you have a specific clause in the contract. And that clause needs to be triggered by your specific COVID circumstances. So very narrow. The same applies to frustration of contract under English law. And this is really a difference to continental jurisdictions, including, I think I'm within my rights in saying Austrian law. You can only step away from a contractual obligation or have it amended to the extent performance under the contract has actually become impossible. Because, for instance, the government has shut down your business. Purely a situation where it becomes economically difficult to perform under the contract is not sufficient under English law. So that's topic number one. Topic number two that has kept us busy was creditors and debtors approaching us, asking to be advised in relation to defending, pursuing and defending claims for payment of debts. I suppose hardly surprising. And here, the most important development, I suppose, is still ahead of us, namely the Corporate Insolvency and Governance Bill, which is expected, well, it will become law at some stage over the next few weeks. It's just a question of the speed of the legislative process in this COVID crisis. And there's a lot in that bill. But I suppose the headline issue that I want to pick out is the essentially it's going to lead to almost an inability to bring winding up petitions as a result of a non-payment of debts during the COVID crisis. So the way it's going to work is that to the extent there is a statutory demand that was served from 1st of March onwards until the day that is a month after the adoption of the bill into law, and we don't know yet what that date will be. So we assume at the moment until the end of August, you won't be able to bring, or creditors won't be able to bring a winding up petition. So this is one of the elements in the bill that is hugely debtor friendly. There are others, and that makes it, I suppose one can have a discussion about that, in that sense, quite controversial, because you could argue that what is happening is that paying, I always say creditors are businesses too, so the pain is kind of being pushed down the supply chain. The third big topic, surely not a surprise in terms of what we've seen on our desks, is questions about employment law. Employment lawyers have been very busy. So initially there were questions relating to ability to bring in pay cuts and the processes for that. Then the furlough scheme came in, and the questions shifted towards how does it work, who qualifies for it. At the moment, we're advising a lot on changes to the scheme, just by way of reminder for everybody. So from August onwards, employers will have to pay NIC and pension contributions. Then in September, 10% of salary, and then 20% of salary in October, and then at the end of October, the scheme, for the time being, that's the status quo, will terminate. And with that termination of the furlough scheme on the horizon, I'm afraid to say that there is, we can see that queries about reorganizations and consequently redundancies are increasing, and I suppose that is part of the reality that we will all be facing over the next few months. So I'm afraid I'm finishing off on that somewhat somber note.
That was it.
That was it.
We are grateful. We are grateful. We of course expected more, but we will take the little that you are willing to share with us.
Thanks very much, Christian. It is, Vera has been very, very clear that I absolutely, and I know she said the same to Alex Martin, had to stick to the 3 to 5 minutes time frame. Now, obviously, I can see that you didn't stick to your time frame, which makes this a bit of a Cummings law. So that's what us lawyers call a law that applies in one way to some people and a different way to others.
But you should have used to that, being my friend for such a long time. Thank you, Alex Kaufmann, and I'll the center stage of the of this screen to Alex Eichmann. A good example for I think what we have all experienced, what I would call the Zoom and MS Team outfit, laced up from the waist up. We don't want to know what Alex looks like from the waist down, but what we do know, or what we want to know, what were the frequently asked text questions over the last couple of months. Alex.
Yes, thank you very much, Christian, for inviting me. You asked me to talk about some of the most important questions that my clients ask me at the moment. As you can imagine, these are questions related to the recovery from this economic crisis, and also questions around how we should all prepare for the end of the Brexit transition period, which will now definitely terminate on December the 31st, as the government announced last week. If I start with some frequent questions around the economic support measures that the government introduced in late March when the coronavirus hit the UK, as you probably all know, the government reacted with some quite drastic support measures, and most of them were summarized by Michael on his slide a bit earlier. And one of the questions that people keep asking me is, for how long will this actually now continue, and what is then to come? One of the most drastic measures was to allow businesses for a deferral of VAT payments from VAT returns that we filed in the last couple of months. The government said that you can defer to pay your VAT liability until the end of this tax year, which is the 31st of March 2021. Now, this will stop for VAT liabilities arising after the 30th of June. But if you haven't paid your VAT bill on your April or May VAT return, you don't have to do anything, since this is an automatic deferral scheme that the government introduced, and there was no application required. If you have signed up for direct debit with Revenue and Customs, you should still cancel your direct debit mandate, because otherwise Revenue and Customs might still collect the VAT from your bank account. The other related measure has been a general flexibility shown by Revenue and Customs to allow for deferrals for a lot of other tax payments, which are not automatically granted, but only on application. Our experience is that if you call Revenue and Customs time to pay helpline and give them understandable reasons why you can't pay your next corporation tax installment, for example, they will allow this. However, in many cases, a reduction of installments is actually justifiable now anyway, because we all will expect less profits or even losses in our businesses in the current tax year. And when you are still paying installments based on your profits from last year, you should definitely call Revenue and Customs and ask for a reduction of these tax installments. The other very important measure introduced by the government was the coronavirus job retention scheme, as it was mentioned by Michael and also Alex Kaufman, which probably saved millions of jobs in the UK in the last couple of months for people that are furloughed. It is, of course, very expensive for the government, and the Chancellor has announced that he will close the scheme on October the 31st. And I guess this will only be the case if we can avoid a second wave of the virus in the UK. But it is very important to keep in mind that this scheme is closing for your cash flow forecasting. It will be very important to understand when these grants will stop being paid. What we haven't seen, of course, but what we expect to see very soon is an emergency budget, which will most likely come in July now, where we might see some broader economic support measures, like a temporary reduction of VAT or national insurance rates, or even an increase in the personal allowance for income tax purposes, which will take a lot of people out of paying taxes. It might help increase consumer spending. These are the areas where I believe the government might do something in the next 6 to 8 weeks. But as mentioned by Christian at the beginning, temporary support measures might mean lower taxes for the time being, but what will happen in the long term is certainly increase in tax rates. We are seeing a deficit rising very fast, and the government has quite an ambitious agenda with huge investments into infrastructure and other areas. So I believe we can expect tax hikes in the future, not tax hikes that will hit employers or investors, but rather tax hikes that will hit consumers. I wouldn't be surprised if we see a VAT rate beyond 20% after 2021. If you look to other European countries, the average VAT rate is already above 23%. So this is where I think VAT is going. And I also expect high income tax rates in the long term for higher earners who currently pay tax in the 40 to 45% bracket. This is where the government will have an easy sell to pay for this very large deficit that is not piling up. So this is where I should probably stop, Christian, because it's 3:29 p.m.
We are very grateful that you joined us. It was a good group of people. It was our usual suspects, our good old friends. But I thank you for joining us, on behalf of my team, and of course, Alex, the Alexes, our two Alexes. If you liked it, if you enjoyed it, it would help us if you would maybe drop us a line. We could have prepared a poll, but we thought maybe it would be nicer if you liked it, because we could do that like every 3 or 4 months, 4 times every year. It's quite, it's quite an easy format. We don't need, it doesn't require a lot of preparation. It also doesn't require then hundreds of people to attend. We are still, for those of you who, we are still thinking about what to do with Austria Connect. We don't know. We would love to. Of course, we understand that Austria Connect, as I always said, is a pornographic movie. The program is not important. What is important, what happens in between. It's the networking, it's meeting people, it's exchange of ideas, stuff like that. A virtual format will not lend itself to that. But depending on what the pandemic situation is, we might have to resort to that. We have booked still a quite large venue at the Science Museum. We could actually, without any problem, accommodate about 100 people, even with the old social distance rules of 2 meters. I think we need to kind of get a better feel of how you feel about it, what you would like to do. Again, thank you so much for joining us. We will come back probably, with another briefing at the end of the summer, September, October, and then maybe discuss a little bit more in detail which direction we will go with Austria Connect. Thank you all, and I hope to see you soon again without a mask, face to face, here at the Trade Commission with a glass in your hand. Thanks and goodbye.